What's going on, guys? Welcome back to the channel. This is going to be one of the most exciting AMC update videos, at least we have gotten on a Sunday in a very long time. The option chain may be setting up for a medium to large size gamma squeeze. Now, I don't want to get your guys' expectations up too much, but we should acknowledge what is happening as far as the option chain activity, because I think it is telling us a very strong story. As well as that, let's go over the Ortex data. Institutional owners, I do want to take a look at something that was posted on Adam Aaron's Twitter that nobody is talking about yet, including these news outlets. They're really keeping AMC in the dark, and I think this is just cool to get into. I think it should be getting more attention, but it is simply not. As well as that, we are going to talk about potential bullish things for the market heading into next week, as well as potential bearish things for the market heading into next week. So with all of that being said, guys, hit that like button for me. Consider subscribing to the channel. Let me know down below in the comment section, what do you guys think about this potential gamma squeeze, as well as what do you think the price action is going to do for AMC over this next trading week. And with that, let's get straight into this video. And first thing that I do want to point out is the fact that we were down about 2.5% on Friday, but we were up about 0.5% in after hours. And when you see a stronger move in after hours, like I said, about 0.5%, that's a decent sized move relative to the moves that we have been doing over the past week, pretty much trading sideways overall. This is telling me we are likely to see a positive day coming on Monday. You do tend to see that. Most Mondays are positive, most Fridays are negative, so this is pretty typical to what we have seen on AMC for a very long time. Now, I don't want to dive too far into the technical analysis in this video because we are really bouncing in between about $37 and about $40 on the higher end for quite a while now, and logically speaking, the only thing to really say is we're either going to break above $40 or we're going to go under this support level per se that we have had at about $37 per share over the past couple trading days. Now, something else that is worth mentioning is the volume was the lowest that we have ever seen on Friday, ever since we did see that rally in June at about 29.5 million for volume. So once we do see volume come back into the stock, potentially with the market makers having to hedge all these calls that do go into the money, we can see a big move to the upside. That is part of the thesis, but it's not really the main thesis. Also seeing a little bit of a cup and handle that may start to play out, especially if you are on the 4-hour candlestick chart. You can see this a little bit clear, but I wouldn't get too hung up on that. Now let's move on to the Ortex data, and then let's get into the whole short squeeze situation. Now, as far as the Ortex data, we are looking at 20.28% short interest of free float, 103.74 million shares that are sold short, and relative to the volume that we did see on Friday, that was over 4 times the amount of volume, or a little bit less than 4 times the amount of total shares that are outstanding compared to the volume that we did see on Friday. So to put that into perspective, that is a very large short interest compared to the volume that we are now seeing. Share utilization is at 87.21%, which is at a comfortable level. It is going up slightly over the past 7 days, up about 2% flat. So that just means there is a little bit less shares that can be sold short now than what there was 7 days ago, but we are still almost at all-time high short interest numbers, and over 20% is categorized as extreme short interest. Also, the free float on loan has been staying relatively the same at about 22.38%, meaning that I think the short interest will hover in between 20 and 21%, probably go to about 21% in this next trading week, just like we were at a couple trading days ago. So that's really what you guys need to know from this. Not too much else to add besides all of this just looks incredibly bullish. Now, take a look at the stock O tracker data, because it's not impressive when you're looking at it like this until you actually dive into the option chain. You're only seeing in the money calls at 19,306, out of the money calls at 201,812. But what is very interesting and what is different this expiration date instead of other ones is, one, this is a monthly expiration date, so you are seeing that increased activity, and it'll be very interesting to see what the stock O tracker numbers do give us coming tomorrow, as far as how many of this premium that was left on last week was rolled over into this week, as apes typically do, sell out of their winning or losing contracts in Friday on Friday, and then roll them over into the next week. So that'll be interesting. But when you actually dive into the chain, you can see that we don't have that many calls that are currently in the money, but right at the $37 strike, and ultimately up until the $60 strike, and really even, you know, all the way down the chain, you're seeing a lot of activity. But what is different is this chain only goes to the $95 strike. So you're seeing all of these, you know, out of the money calls that are concentrated in between where we currently are at the $38 strike and the $95 strike. So you are seeing a lot of activity on every single strike. The $38 strike, you're seeing 5100, 3400 at the 39, and then at the 40 you're seeing 10,582, another 8,000, 5,000, 6,000, 5,300, 17,000. That's leading up to the $45 strike. So if we can see a big move, say to $45, then you should see a big move to the potential upside and even go past $45. Now, I'm not a fortune teller. I don't know exactly what is going to happen. If I were to put my money on what will happen with AMC, it's probably not going to go over $50 this trading week. Yet again, we are due for a major bounce. Even if we did go to about $45, that would be a solid win, but it would still put us in between coming back down to 40 and going up to $50, our next resistance level after we break out past 40. But just this activity right here is hard to deny. It looks like at the very least we are going to see a bit of hedging that does happen as long as AMC does go up and we can break over $38 per share. If we break over 40, the situation looks incredibly bullish, as we do have, like I said, 8,000 for open interest at the $41 strike. So very, very interesting. I did want to bring this to your guys' attention, not to really, you know, get you guys excited, but just to be aware of the situation that may or may not unfold in front of us. Now, let's talk about the Fintel numbers, and we have covered this in a couple of videos. Not too much has actually changed, but you are seeing most firms that are reporting they have held on to their total positions, and some of these average share positions are $47, $42, $50, $47, $47, $47, $50, $45, $51, $23. You guys get the idea here. These hedge funds, they are holding on to their positions when they are substantially underwater on these positions. So the only reason a hedge fund would logically do that is if they thought it was going to go back up in value. So that is very important, something to keep your eyes on. We will get more of these filings coming out in the next couple of weeks, and we will, you know, pay close attention to this, what Citadel is doing with their position, as well as Renaissance Technologies. A lot of other firms we will be directly monitoring on this channel. So if you guys do want to stay up to date with that, hit that subscribe button for me. But let's now talk about Adam Aron and what was on his Twitter. This is incredible. I'm gonna go ahead and play some of this video. If you guys don't know who this is James Bond himself. It's Daniel Craig. So I thought this was very interesting, something I should show you guys. You know, talking to an audience in AMC before the movie did go on. This is obviously not getting any coverage on CNBC or any other news outlet that I looked at. Very interesting. Makes you wonder why they would not want to show this, not want to give AMC the credit, the light that they do deserve, because I think this is pretty cool. Now, we're not going to sit through this whole thing. It's only about a minute long. You guys can check it out if you guys do want to. Let's talk about the potential, you know, upside and negative for the markets coming this week. And what I have seen from a lot of analysts is a lot of fears about inflation and the meeting coming with Jerome Powell on November 3rd about possibly starting to taper. So just because the debt ceiling situation has got pushed down the road, I don't think a lot of those fears are going to be gone overall. You're still going to have some lingering debt ceiling fears, as well as the overall Chinese real estate market and economy. That's definitely going to play a role into the markets, as well as analysts have just been saying, you know, inflation is going to be a hot topic to be watching. So overall, there is a lot of negatives that are playing into the markets as we do currently speak, but also some of this information could be seen as bullish at the same time. I do want to show you guys the S&P 500 as well, because as you guys do know, AMC 9 times out of 10 has been correlating with the overall markets throughout, you know, this whole sell-off that we have been seeing, and we are literally actually almost right in the middle, slightly skewed to the bearish side since we did see the sell-off at the end of the day with the S&P 500, but we're in between the 50-day and the 100-day moving average. So if we break under the 100-day moving average, you're definitely not looking at great signs right there. Obviously, that would trigger a lot of trading algorithms to start selling stock. You would see markets go down. People would then again get fearful because the whole debt ceiling situation was, you know, a big reason to be fearful, but that is gone. If the markets are still fearful, I think that highlights a bigger issue that is going on. If we bounce above the 50-day moving average, which would be a substantial move to the upside, then it does look like some of those fears have gone away. Really, we've just been bouncing in between the 50 and the 100-day, going under the 100-day more days than we have been over the 50-day moving average. So definitely something to keep your eyes on. We will likely correlate with the overall markets. If they are positive, then we do have a substantial chance to see this gamma squeeze unfold in front of our eyes. So that's all I do have for this video. Hopefully you guys got some value out of this video. If you do, hit that like button for me. Consider subscribing to the channel. Stick around a while. Let me know down below in the comment section what you guys think about this next week with AMC stock. Do you think a gamma squeeze is on the table? Do you think it's not on the table? And before we do wrap up this video, when I say a gamma squeeze, 20% move is a medium-sized gamma squeeze. If you guys are, you know, thinking back to the 50, 60, 100% moves that we've seen in the past, that was not a typical gamma squeeze. A medium-sized gamma squeeze to me is about a 20% move. I would be very happy with that next week. Now, also, if you guys do want to support the channel, make these videos possible, check out the link for Public as well as the link for Webull and the link for the buy and sell alerts. If you guys want to be notified every time I buy the dip in AMC, any other stock, whether it's a stock, options, or crypto, whether it's a day trade, swing trade, or long-term investment, check that out. We keep it very inexpensive, so anybody is financially able to join if they want to be a part of that and grow their knowledge. So that's all for this video. Hopefully you guys enjoy the rest of your day, and I will see you in the next one.